Hi, this is James Shug with Westpac London's end of day report for Monday, October the 31st. Well, it was a real risk-off day today. A range of factors have undermined confidence in markets somewhat. We've seen, for example, the comments over the weekend from the Chinese news agency saying that China should not be viewed as a saviour of Europe. Yes, they might be buying the bonds of the newly expanded bailout fund in Europe once details of it are known, but at this stage there's been no firm commitment, whereas last week there was commentary suggesting they would actually be keen buyers. So part of last week's rally, of course, has been eroded on the basis of that Chinese news. And as well, I think people have had time over the weekend simply to digest the lack of detail in the plan that was announced last week by EU leaders. So at this stage we've seen about half of the stock market's rally in Europe on Thursday following the announcements of the various plans. We've seen about half of that eroded so far, a little bit on Friday and a lot more today. In other news, MF Global, a primary dealer and a broker in the US, has been declared bankrupt. They have declared bankruptcy. They were suspended by the Fed as a primary dealer, so that's raised concerns more generally about the health of the US financial sector, and that's hit equities stateside. In other news, we had, China has announced it's going to continue with its measures to slow down the property market in China, and that's hit copper prices quite hard today, with the flow-on impact for the commodity producers. On the data front, not particularly exciting. We had some surveys out of the US, Chicago area factory survey. It fell in October, but remained relatively high, and some of the detail was okay. In Dallas, we had a similar factory survey there, which rose quite sharply in terms of Dallas businesses' assessment of general business conditions, and the detail there was reasonably mixed to positive as well. But that reasonable US data today really wasn't enough to prevent markets from falling, given the collapse of MF Global and the European concerns. Oh, speaking of which, Italian bond yields up to, I think it's 6.14% today on the 10-year. Remember, 7% is seen as the level where it just becomes impossible for governments in Europe to keep funding themselves, given how much it would cost merely to service the debt they've accumulated. Portugal, Ireland and Greece all had to seek bailouts when their 10-year funding costs approach 7%. And given that Italy was trading below 5% just a couple of months ago, when the European Central Bank started buying the Italian bonds, the fact that they're still buying those bonds apparently, and yields are up at above 6% now, is certainly of concern to markets. So we've stopped focusing perhaps on Greece, but the focus is very much intensifying on Italy. So that's really the story today. In terms of the market impact, just after 4 o'clock in London, so an hour ahead of the close here, US markets have been trading for 2.5 hours now. We have the FTSE in London down 1.5%. The likes of BHP, for example, down about 5% today on weaker copper prices. We've got the French market down 2.2% today, and the German market's down 2.4% at the moment. In the US, looking at 1.2% drop for the Dow. The Dow level is 12,083 at the moment. The broader S&P is down 1.3% as I speak. In terms of commodity markets, just a couple of figures for you. We've got oil prices down 1%, $92.40 a barrel. Gold is down 1.2%, $1,727 an ounce, and copper prices down 2.3%. In fact, just counting through this list of 19 commodities, 18 of them are down today. Lean hogs, the only one that posted a gain, up 1.5% for those interested. The Aussie dollar's had a bit of a down day, but a bit of a recovery more recently. So it started at 1.07, fell to 1.05, so a 2-cent drop in the Aussie, but it's back up just on 1.06 against the US dollar at the moment. Don't forget, we've got the Reserve Bank board meeting coming up tonight. We're looking for a rate cut of a quarter point from the RBA, and of course on Friday we'll get more information from them in their quarterly monetary policy statement. And I'll be back to speak to you perhaps about that and what else has been happening in markets same time tomorrow. Bye-bye.